Well, we finally bounced 2,000 points on Friday. Nice timing on the video on, I think it was Thursday night. Just kind of getting that bounce list ready. What would you buy when the market rebounded? That came in handy towards the end of the day if you took part in that rally. It's been a wild, I think 3 weeks now, 4 weeks now, of up and down 1,000, 2,000 points in just uncharted territory. I mean, things that we've never seen before. Market halts, like I talked about, that haven't happened in over 20 years or at least 20 years. And, nobody really knows, what's going to happen. And it's very similar. This whole coronavirus thing is very similar to being on the wrong side of a trade, right? It's the fear of the unknown. We don't know how fast it can spread. We don't know how big it's going to get. And that's very similar to being on the wrong side of a trade where, as soon as you get out of the trade, you have that sense of relief. Okay, it's over. All right, that's it. I'm not going to lose any more money, but, that sucked. And the same thing with coronavirus where, right now we don't know where that stop loss is. We don't know where we're going to stop out. We don't know how big this could get or how wild it's going to get. So that's where all this fear is coming in. We don't know if this is going to last, a month, 6 months, a year. Maybe it just keeps on growing. We don't know. So we're going to have to take some very drastic measures. And, I honestly think you should be prepared for a shutdown. It may come as early as tomorrow night where we are forced to literally just go to the grocery store, doctor's office, or pharmacy. And, corporations you might see shut down. And that change alone would probably cut down this to maybe a 1 month kind of issue versus something that may take 4 to 6 to 12 months. And what is going to take more out of the economy? Something that is going to last for the next 6 to 12 months or something that's going to last a month, but the catch is you got to kind of shut everything down for 2 weeks. So we'll see what happens. And, it's going to be an interesting kind of week, month. A lot of stuff's going to happen. As far as Trump talking about, did you see that rally and biggest, 10% gain, blah, blah, blah. None of that matters. That's one day, right? And one day it rebounded. We're still down, 6,000 points or something. So, in my opinion, it doesn't mean that we've hit bottom. As soon as we start selling off again, everybody's going to get nervous again. So, until we have that sort of end point, that sort of spot that we know that the fear can go down, that's when we're going to start to find a base. And again, like I've been saying for weeks now, this is not a 2 week, 3 week, 4 week kind of problem. This is going to be, months and months and months of issues. It's going to, probably force a lot of companies to have to change a lot of policy, a lot of numbers, a lot of just everything. It's just not good for anything. It's going to last a lot longer than most people think. So just be cautious of saying, all right, yep, we hit bottom. Because I don't think we have. I think we'll, everybody's going to be excited to rebound and buy the dip and all that kind of stuff. But, we still have a very serious issue here. And just don't underestimate it. And like I said, and I think I'm going to hit it again on my points later on, but, don't confuse trading with investing and investing with trading. A lot of people starting to put on positions, but they're thinking with a trader mentality. They're looking at it, refreshing. Oh man, I'm down. If you're investing for the long term, invest for the long term, and that's it. Don't mix the two. So, anyway, this shirt that I'm wearing today, I had another one planned, but I didn't get it in time. But one of the guys that won a shirt off this scan actually had an apparel company, so he sent me a few. So I threw this one on. So thanks for sending it. The main thing I want to talk about today is market's insane. Yes. And look, if you didn't bank last week or the week before, or you're not doing well right now, that's okay. The worst thing you can do is kind of look at others and get frustrated that others are doing it and you're not. when I'm firing on all cylinders, I'm firing on all cylinders. But when I'm not, I'm not, and I'm head down looking for the next A plus trade. I'm a very streaky trader. When I'm going, I'm going, and nothing can stop me. But when I have that first loss, I gotta reset, kind of figure out, all right, where do I need to be, grab my bearings again, and then just kind of start to fire up again. And fortunately, I put in a few parameters that I'll go over in a future scan that have actually really helped me keep at this level, because I've said it a million times, I'm a stubborn trader. And so that's a video for another time as far as one of the parameters that I put in, but it's been really helpful. So just remember that when you focus on others killing it, and yes, I had the best week of my 17-year trading career last week. But if you focus on that, you're not going to be happy. You're going to feel like you underperformed, whatever. And in scan, I have a comment here. The one thing that you always need to remember is that someone will always make more, right? So, heck, I could tell Phil Ozark Trades, who a lot of you guys know, spoke many times at Traders for a Cause, how much I made last week. And he'd be like, oh, great. I made that on Tuesday or Thursday. And, all of a sudden I would feel like I underperformed. Meanwhile, I had the best week of my career. And so, just always remember that no matter what, somebody's always going to make more. And you should never be focused on the P&L. You should never be focused on what others are doing. But you should always be focused on kind of, how you can become the better you, right? So, let's see. That's a big reason why, I don't post P&L every single day. It's called low-hanging fruit, right? You dangle this little carrot and you try to get subscribers and things like that. And that's the worst kind of subscriber because it's just churn. It's the same thing as the people that post Lamborghinis, Ferraris, and all that kind of stuff, and you join because you want that car. If you join with that mentality, just like that presentation that I went over in Vegas, I mean, like I said, you should just stop. You should just stop because your focus, you should be obsessed with the process, the edge, the opportunity, and if you're obsessed with P&L, cars, watches, you're already going down the wrong path. So I always like to stress that. And let's see the other points that I had for tonight. Focus on what matters. And was it repeatable? Can you do it yourself? Do you understand the why, right, behind the trade? Do you understand why that trade was made? Do you understand what made it a good trade? Do you understand the risk versus the reward? A lot of people might ask, I didn't know if it was a long or a short, and they might get confused. Imagine if you had just jumped in after a trade following somebody and you didn't know when to get in or when to get out rather, and you just kind of left hanging there, right? So the key is to really understand the dynamic, the full concept as to why a particular trade was a good trade. And let's see what else I had for notes tonight. Had a lot of notes. So again, are you being the best trader that you can be? Everybody's going to be a little bit different. Right now, we're in a trader's market, right? So there's two types of trades for me right now. It's either A+. A+ is something that I am, ready to go. I'm prepared. It's been setting up for multiple days. It's gapping up. It's doing exactly what I expected it to do. And therefore, it's a reactive trade, A+ trade. I'm taking it off the open, reacting to whatever happens because I am prepared for that. The other type, and that actually is how Friday started, was hands off. There are good trades setting up, but there isn't an A+ trade off the open. So I want to take a moment. I want to take a step back and have my 2, 3, 4 names. Typically, I try to go 2 or 3, and just wait. Just wait for that opportunity to come to me. Pre-market, you should be kind of looking at the charts and say, all right, if it gets here, I'd probably do this. If it gets here, I'd do this. And that's where you start to dabble in. That's where you start to take your initial positions and what I call, a dabble. There's no reason to be crazy size right now. I went over that in the last video. Just kind of think back, even 300 shares on some of these moves the other day that are going 3 to 5 to 7, $8. It doesn't take a lot of share size, a lot of risk if you're on the right side of the trade. So that's one big point. Another thing that a lot of people say is, you only need to get rich once, right? So right now is, especially if you're a new trader, it's not about I shoulda, coulda, woulda. It's not about I could have held all day, I would have made this much more. No, it's about taking advantage of the opportunity. I showed you guys Royal Caribbean, the RCL trade that I had. The stock went from 32 to 39 and right back down. Had I not sold at 39, I'd probably be pretty pissed off, and I'd probably be upset that, I tried to hold out. I turned into a kind of an investor mentality rather than the stock just ran up $6-7 in a matter of minutes, and I didn't take any off. What's wrong with me, right? So I had this conversation with a friend of mine who was in the office the other day as well. He came, I think, Wednesday, and then he was trading at his house on Friday, and he was short OPK. And, the whole fundamental reasoning is mostly his thesis, but I reminded him, none of that matters in this market, right? Coronavirus, anything related to it, all that matters is the trend. So, we both had the trade. We were both on the right side, and he's like, I'm going to put a stop here. And, all he did was had his stop out there. And I said, well, what about your covers? He's like, well, I think it's going to fade all day. And I was like, we're just not in that kind of market. Why don't you put some out at 181, 191, something like that, so that if it flushes down, you get covered. Rather than just say, all right, I'm in. I'm going to just let this work to my risk, and I'm either going to make the money or I'm going to stop out. And there's no reason to be trading like that right now. Get on the right side, scale into a winner. When that trade comes, be there. Be there, cover. So he ended up covering 181, 191. And then it went a little bit lower, covered the rest, and ended up being a great trade. It went all the way back up to 210 after. He would have stopped out and had no gain, right? So you have to understand what kind of market you're in. You're not in a patience, let this thing kind of work. As soon as it speeds up, whether it's the upside or the downside, you got to take some off. You look at INO, you look at Codex. Codex was another one. And I had posted my chart on Twitter if you guys saw. Reactive trade. And if you weren't there on the pullback, you missed out. So last couple notes, new traders, take gains, be aware of multiple consolidation periods, right? So you might nail that trade, it flushes out, but it's going to come back, consolidate. Then it starts to ramp, comes back, consolidates, and pulls right back to where it was and continues, consolidate, ramps up, slams down, consolidates. And so that's going to happen over and over and over again. So it's easy to get exhausted. It's easy to be, trying to scale in, trying to be patient with the trade. You have to realize the channel that it's in. And if you're getting too aggressive towards the top end of the channel and it breaks through for a minute, you're going to cover. You're going to be mentally drained. You're going to be exhausted. You're going to miss out on the entire trade. So it's better to be up into the strength when it breaks through the channel, just like Codex trade, just like INO the last couple days that I've been going over. It's better to be there and also be on the cover side when it flushes out. Otherwise, avoid those types because you're just going to get chopped around and around and around. So cautious of forming too much of a bias. INO is a good example of that. Yes, the trade ended up coming in. Yes, eventually you would have been right, but it goes to the extremes both ways. Think about how it ran up to 15. Think about how it faded all the way to 5 and then all the way back up to, I think, 10 or 11. It goes to each extreme and will work you out along the way. So you have to be super cautious about that. And the same thing with OPK, like I was just talking about. You have to be cautious of staying power. These things are hanging around longer than you think, and you have to be aware of that. And lastly, for veteran traders, watch your bias, watch your sizes. You don't need a ton of size right now. And, my week was not aggressive size. Yeah, I scaled into some, big winners, but I was on the right side of the trade. I had a lot, a big padding, and I scaled in, scaled out. But it wasn't a result of me taking extreme risk because it was a great setup. It was just trading normal, trading well, and it just added up. Only size in after the exhaustion candle. And so that therefore you're not involved in that parabolic move that's going to squeeze you out. Look at the Codex guys that got blown out into the close at 13, CODX. That happened on Friday, and it just blew everybody out. Where did it close? In the 9s. So that was great, and I was there at 13. I think it was 1320s, 1350s, whatever the high was. There, I was shorting right prior to the halt that never happened. It almost went into a circuit halt, and then it slammed down. Less is more, and have wish orders out. Have wish orders out. That is so important, because if you're not there, these market orders come down, and then they come right back up 70 cents, right? And maybe you only got 1,000 shares, maybe you got 10,000 shares, but no matter what, it's all relative to the whatever size trader you are, right? If you're up 1,000, all of a sudden 700 goes back up, or you're up 10,000, all of a sudden 7,000 gets depleted. You should be there. You should be there. You should be locking in along the way. Take the gains, look for the next one, and keep on going. The other piece of advice that really has helped me: have a max loss. When I'm trading well, my losses are minimal, because the way that I trade is I start in very small, but when I'm right, I'm really right, because I really scale. I really scale into stuff. Once I have that padding, once I'm on the right side, once I'm proven that, yes, this thesis is correct, it's playing out how you thought, then that means I'm right. Go for it. And so typically my losses are very minimal compared to the gains. And when I lose, if I lose, a certain amount, it's either going to be that amount or it could get really bad, because I'm a stubborn trader, right? So I have a stop, and I'm going to get into that in a future video, but I would suggest figure that out, and whether or not you have it, mentally, where you just auto get out, or if you just have it auto liquidate you. I think it's very, very important, especially in this market, because you don't want anything to knock you off your game, okay? And it's very rare that I get into a situation where I'm, getting too aggressive on the wrong side, and I get up in a really bad situation. But when I do, it's either I cut it off or it turns worse. And I have a solution to prevent it from turning worse. And again, I'll go over that in another video. But I would really review your trades, because the key is to make sure that you keep your losses to a minimum, to a level that is not going to impact you, right? So, you could be making decent every single day, but then if you give back 5x, it's going to set you back a little bit. You want to give back a max of a day or two, right? Something that you can, right away, bam, and you got it back. If you start giving back a week or 2 weeks or a month, that's when you're going to run into issues. That's when you're going to go back and look through your year and say, that it was this trade, this trade, this trade, and this trade, and I would have made X. Well, how do you prevent those trades from happening? And so that all comes with a stop in a particular level, whatever it may be. Get prepared. Get ready. Get prepared to execute A+. If it's not A+, like I said, we're waiting for scan hits, waiting for the trade to come to us. With range like we have right now, there's no reason, because you can get, there's so much meat on the bone that you can get. So just be patient and wait for that. And no reason to catch a falling knife in this market, right? RCL, CCL, all these cruise lines, just straight down, 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 down. So if you're there trying to find the bottom, all of a sudden it loses $2 more, $2 more, $2 more. That's called catching a falling knife. Okay, the only edge is when it flushes out, and that's not for new traders. I think that there's an edge in a washout, a flush out, which is basically the opposite of a parabolic. You're going down, 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 all of a sudden it flushes out, right? It's not a size trade, and it's only for traders, veteran traders, I would say. But that's the only edge in those types of things. Otherwise, you wait. You wait until there is a trend. So, AAL, UAL yesterday, or Friday. Yeah, Friday. There was 2 great setups in those, starting to base and rally really, really nicely. Look for relative strength versus the market, versus their peers, and all I did was join the trend, add, and it turned out pretty well. So we're gonna have a lot of these, but the key is to not find the bottom. The key is just to take a piece of the meat on the bounce, and there's gonna be plenty of bounces when and if we ever do bounce in the market. So let's get right into Scan. Hopefully you guys took something from that. But I think the biggest takeaway from that is to really focus on your losses and make sure that they will not throw you off base. Because when you're firing, when the market's like this, there's nothing worse than having zero confidence and not being able to fire at what you see. Right? You want to come into the market every single day and being ready, and you need to be highly confident, not cocky, but highly confident in your decisions, because that's what's going to allow you to, execute into the ramp, into the flush, or at least be patient, knowing that, over time, this particular setup, works. So, hope that helps. All right, so tomorrow is going to be a scanner day, like I said, and I think the biggest part or the biggest thing that you need to understand is that, there's days that scans are really, really important, and there's days that, you just got to kind of come to the market and see what's happening, right? And so every single day we're either up or down 1,000 or 2,000 points lately. So I've got these watches. These are ones that I like. These are ones that I want to focus on, but it's not as A-plus type excitement as usual, right? So OPK was a fantastic trade on Friday. You guys saw the review on that. I posted that on Twitter. Basically shorted the morning strength, covered in the flushes, and then I looked left, saw the resistance here, and I got short into this level, and we got a nice washout into the close. I'm looking for similar. I'm looking for the same thing. I'm looking for 210s, some type of blow off. Hopefully there's a lot of shorts here. If there is, then we're going to have a good opportunity to take advantage of this again. I don't want to step in front of it. At this point of the game, if it starts to hold, that means that a lot of people are probably going to be on the same side. And just like I gave you guys that kind of heads up on INO, everybody's going to be trying to do the same thing. So it's most important that if you nail the trade, you go ahead and lock in. Otherwise, you're going to be doing the same thing as everybody else. It's going to hang around a lot longer than you think. VIX, fantastic opportunities lately. Not so much for the new trader. A lot of people don't know even what it is. They all think it's the inverse of the SPY. It's not the case. It's a volatility product. It just happens to move a lot because when the SPY comes down, typically, yes, it's a volatile kind of day. So with that said, that one's going to be on watch. AMD and INTC, both like the ranges, like the opportunities. I think we can get $2 or $3 out of these things. Again, I don't have a crazy plan for this because are we going to be up or down? Let's make it on the fly. Let's see what happens. But I'm looking for price ranges, stocks that are trading the way in which I like. I like to look at the intraday move and kind of see if it's a friendly trader or not. A trader that's not as friendly would be something that's a very, very tight trend where you don't really have an edge. Something that starts to kind of form a trend intraday and have a lot of opportunity and something to risk off of. Clean trends, things like that. I want to trade that. And that's why INTC, AMD, UAL I traded. So that's that. Failed follow through momentum. mRNA. mRNA was a fantastic idea the last couple days. This has been on scan for the failed follow through momentum. You can see the wicks on the daily are opposite what we usually talk about, right? So usually we talk about the dips getting bought for potential breakout. Now the rebounds are getting sold for potential breakdown. The thesis was, we're in a pretty crappy market right now. All those folks that just took part in that huge offering probably are a little nervous with a big stake in this thing. They probably want to get a little bit liquid before, something happens and they lose 50%. So let's see what happens. But higher the better. Obviously, it's going to go along with the virus names, and we have to be patient from there. Codex and INO, same thing as the last couple weeks. I know I'm flying through these, but I don't want to take too much of you guys' time with kind of going into these with too much detail, and then you end up overthinking it. I just want to have INO and Codex on watch, reactive trades. I'm looking to take advantage of those wicks. I'm looking to take advantage of the big moves. Not every move. Let it kind of set up, start to grind, squeeze out. That's where your edge is. And that's, you guys saw I posted the Codex trade and the INO trade on Twitter. And same thing, Codex, I also traded into this rip over here. Covered way too early, but again, your edge is not getting bent up. Don't step in front of stuff with size. Wait for it to blow off. Wait for the volume to come in. Look at the volume associated with this breakout compared to, this slow, steady, small grind, held VWAP. Let it retest. It actually busted through these prior highs right here. It's fine to dabble. I dabble all the time, but make sure you're not sizing against the trade. So I know we went over. OXY is going to be, a trade with oil, energy, and if the market's up, this might keep on going. But if we get pressure again, I want to lean on this. It doesn't matter that Icon's in. I mean, it's going to be a sector trade. He's long Hertz as well. So a lot of people put a lot of faith in names that he's long, but at the end of the day, he's long HTZ, and it's been nothing but unwind. So with that said, I think this one could be good when the market does pull back a little bit in oil again, oil and energy and all of them, because I think he brought in a lot of retail traders from CNBC on Friday. Get excited and all that good stuff. JDST, I'll be watching. Leave it alone if you're new. ETF, dangerous. But I'm just going to start to kind of watch it just because there's been some pretty good volume, good action. Usually I'll take one trade off this thing and then take it off watch before I give it all back. UAL, great trader, nice opportunity, V-shaped recovery there. You saw I got long into the flush and was trading the dips along the way. Nice little setup here, kind of like an ABCD type setup right on VWAP, and then it started to rip. Very great trade to kind of dabble, scale into the winner, and when it speeds up, go ahead and lock in along the way. Again, I don't have here's what I'd love to do right off the open. If it gaps up 2, if it gaps down 2, I'd probably react to that. But again, I'm just trying to compile a list of names that I most likely would like to trade in this market. AAL, if UAL starts to do something great, then I'll trade AAL along with it. Couple bounce watches, and so TVTY. So this is ugly intraday, right? This is what I'm talking about before, untradeable. It's not as clean as something like UAL, which has nice grind, nice risk. But this daily chart I want to see, SVC I want to see, and PLAY, disaster, I want to see. And the reason why is the same thing as TRIP. TRIP I was watching, and if you look at it, beautiful move. 1470s up to 1720s, over 250 a share. Right? Doesn't mean you're going to catch it all, but it'd be nice to get the meat of the move. Starts to rebound. It's going to probably be thin to the upside once it reverses. Take advantage of those rebounds and come out. Get out of the name. Don't overstay. But this is an example of what I'd be looking for. It doesn't even mean down here. It comes up, it went over VWAP, pulled back, it held, and at that point, I might like it versus a VWAP level. So that's what I'd be looking at, TVTY, SVC, play. But again, right now, it's about getting up early. It's about getting prepared. It's about not getting exhausted on the front side of moves. It's about waiting for trends to develop. It's about joining those trends. It's about reacting to big moves. And that's it. I mean, scans, yeah, it's good to be prepared. It's good to see charts. I think the more beneficial thing than scans, this scan tonight, is actually going through all the results of scans and just seeing those charts once. Go through it. Go through 20 of the pages. My scans tonight, I think, had 200 pages on the upside and the downside. But go through them. See that once. and make a note of ones that you like. Put the price alerts in, like I've explained on Investors Underground, and go from there. So hopefully you guys took a lot. I think the most important part about this market right now is everything that I said in the first part of this over the scan itself. And same thing, psychological side of things that I went over in the last video on Thursday that we sent out. Got a lot of great feedback from that, so thank you guys. Great questions, great back and forth with a lot of people. So that's that. That's the scan for tomorrow. We'll see what happens. Like I said, to start this, you're only as good as your last trade. Just like Greg told me one day, it's you got to act like you've been there before. I had a great week last week, but you know what? Monday starts tomorrow, and that's it. I'm coming in clean slate, and it doesn't matter what happened last week. It doesn't matter the week before. Yeah, it was great, but the sooner you get to recenter, the sooner you get back to doing what you do, the better it's going to be. If you start slugging for home runs because you made a lot. I got a lot of PMs last week, a lot of members that were absolutely killing it, and the first comment was, obviously congratulations, but also, words of advice. If your first home run up at the plate, you're playing baseball, right? First, you get your first home run. If you go up there and try to hit a home run every single time, what are you going to do? What are you going to do most of the time? You're going to strike out. So just make sure that once you start seeing some success, and it's not very hard in this market to potentially do that. Yeah, you can obviously lose. There's risk. But there's going to be a lot of people seeing some decent P&Ls in this market because the trades are there. The key is just to not change what you're doing. Don't change what you did to get there. A lot of people start to change things up because they're like, oh, well, I made this, so now I can risk more. You risk more, it goes away just as quick. 2 times as quick, 3 times as quick, depending on what size you trade, all right? So make sure you keep that in mind. 2 other notes. One is Joe Palmer. You got the free t-shirt this week. And next week we're going to give a month of Investors Underground away. So at that point, I'll ship out the last 3 shirts that I promised. As I've said, I do it once a month. The last note I wanted to say is there is a nice little bell on YouTube. So if you click the bell, not just subscribe to our channel, but if you click the bell, it'll actually push through to your phone. It'll actually push through to your email if you want. And that way you'll always get an email when we upload a scan. So just in case you're not on the list, you can go ahead and check that out. And as usual, leave a comment. Like I said, next week's going to be the free month of Investors Underground. So make sure you leave your biggest takeaway. The key is for me is kind of understanding what you guys pull from this. Because then it helps me, educate others in the room, as well as give better analogies or better ideas, better intros to these scans. So that's it. Catch you guys on Monday. Be safe out there. Be cautious, and let's see what happens with the market on Monday.